Hello and welcome to Leviathan News. I'm Samuel McCullough, and this is today's stories. Yesterday we had Trump and Dump, which is the name of our article today. What a wild day in the market yesterday. Trump sent markets up, he sent them down. This past 96 hours has just been incredible. Everybody's been talking about the tariffs. I think that's like the big topic that's been going on, but really the story is much deeper than that. So we have to go back to April 7th, and that's when at 10:15 we get the first rumor about there being a 90-day pause. Now that came out, I believe it was Delta One who sent it out. The White House came out and publicly denied that statement a few hours later. But it sent the market into a tizzy. It went up about 4%, and then it came back down about 4% as well too, just rocketing all over the place. We talked about this earlier in the week, how the market's just so attuned into any sort of little piece of news. The momentum algos are just trying to get in front of everything. So the market was just in this like completely confused and panicked state. But even as the equity markets were seesawing and moving around, something much worse was happening. And that's that the 10-year, the bond, spiked over 30 basis points in one of the sharpest intraday reversals in recent memory. So bonds and stocks typically trade inverse to each other. If stocks are up, then bonds are down, right? If bonds are down, then stocks are up. That's just how they work, or at least they should work. However, in this case, when we got the news about this proposed pause on Tuesday, that's not what happened. Like, we had this potentially good news, but at the same time, the bond market was showing that there was bad news happening. TLT, which is the long duration treasury ETF, saw its highest trading volume ever, right? 25% above its previous records on the day. And what was happening is that traders were selling 10 years and other long dated duration in mass, right? Rate cut expectations were collapsing, and we went from an 85% of a cut to 33% in one session. And that wasn't just US markets either. The Japanese 20-year spiked in the yield. The Nikkei jumped 6% at the same time. And this is even after like good consumer credit numbers were coming out. Like, the fundamentals are saying good things, but the bond market was just saying that something was broken. And to really understand this, you have to understand the size of the bond market. Like, people like to talk about stocks and equities and stuff, but the bond market is just 2 to 3x, 4x times bigger than that. And especially at the global level, it is the biggest market in the world outside of derivatives. And so when the bond market sneezes, the equity markets get a flu. We didn't know about the 90-day pause at the time. Trump knew. And it seems probably that they were like floating this idea of the 90-day tariff. And that's exactly what they did. On April 9th, Trump came out and said, it's a great time to buy. Posted that on Truth Social. That came out at 9:37 a.m. Then later at 10:18, he comes out and he says that there's going to be a 90-day pause on all tariffs so that they can renegotiate the terms with those countries who want to come to the negotiating table. But China is going to have their tariffs raised up to, I believe it's 125%. So continuing to push China while giving an out for all those countries around the world who might want to come and talk to Trump and his administration. Well, that's great news, right? The market has one of its best days since 2008. The NASDAQ is up 10%. The S&P is up like 8%. Crypto's up like 10% as well too. Just a wild day. But there were some weird things that was happening. So first was that if you looked at the call option volume, so call options are just a contract to buy a certain stock or a certain bond. It can be really anything. A contract to buy something at a certain price. Well, before the 90-day pause announcement came out, somebody was out there like buying call options in mass, like huge amounts of SPY, QQQ and SPY call options. And those turned out to be doing really well. And this was before the announcement came out. So there's been a lot of discussions about insider trading that are going to have to be fleshed out. This is what the SEC is for. They have all that trading data. They can go back and get it. When this huge rally was taking place, yields went higher, which means that bond prices went lower. Gold jumped $100 in one day. Junk bond yields hit 8.5%, which is a 52-week high. SOFR swap spreads collapsed. Crude oil tanked, and TLT got hammered. The MOVE index, which is like the bond version of the VIX. So it's like a fear indicator. It tells you how much people think the index is going to move over a certain period. So it jumped to 178, which is some of the highest levels ever recorded since the COVID crash, and then 2008, and then the 1997 crisis. And that's not a healthy market, right? So when the bond move is telling you that there's something wrong, even when equities are just like screaming higher, something's going on. And what actually happened?
It is the White House who capitulated based on everything I hear and all my sources. And the reason why is because of the bond market and what happened last night. You know, Bessent knows this better than anybody. When you have yields on the 10-year rising to 5%, stuff starts shutting down when you have the lending markets screwed up. By the way, who was dumping the bonds? Somebody asked them if it was China, right? Mm-hmm. It wasn't. It was Japan. While he was negotiating with Japan, according to my sources, who are running major money management firms that are involved in the bond market without giving up names, Japan was dumping bonds because they believed this was not a great place to do business. That forced their hands. Now, what you can say, I think, legitimately here, is Trump decided to take the win. And here's why. There was overwhelmingly, deal potential here among the entire world, except for maybe China, right? Everybody really wanted something. So he did take the win, but make no mistake about it. Peter Navarro was talking as of yesterday about not taking the win, and now they did. And it's all because of the bond market.
And so if Trump keeps up this level of volatility, which he might for a while, the market's going to break. Like, we have yet to see any sort of like big financial institutions go bust yet. I'm sure there's some funds that are under a lot of pressure after these few days, but really the thing that we should be watching for is the next domino to fall on all of this. Like, which big bank is going to need a bailout? Which hedge funds or massive institutional pensions or anybody else are going to have issues that they have to go to the Fed for? Because if you look back at all these major bond moves, right? The last one was the gilt move in the UK, which happened a couple of years ago. A lot of pensions were caught offside, and they had to go to the UK Monetary Authority and tell them, like, we need a bailout because the yields moved way too fast in one direction and we weren't ready for it. Or we're going to have billions of dollars of losses, which we're going to have to book for our pensioners. So the Bank of England had to come and bail them out. I don't know if we get bailouts this time. Trump seems that the kind of guy that he might protect the big banks, but I think he has a chip on his shoulder. And I don't know if he would step in to bail out banks that were crashing. So, we've seen the Bitcoin price come down to like 76,000 and then back up to 80 and then hover around there in that range. It would be a gift if we are still in that range for the next month or two with all the volatility that's taking place. There's no question that we could definitely go lower based on the fear in markets right now. Nobody really knows what China's going to do. Nobody knows what's going to happen with this trade war that's going on. So there's a lot of uncertainty in the market, and risk assets go first. But in this case, Bitcoin is one of the few assets in the world, like gold, which cannot be tariffed, cannot be subject to trade wars, and can freely move around wherever it wants to, which gold can't. So we'll see how it actually performs. It might be one of the better performing assets coming out of this year, or because it's one of the most risky and volatile assets in the entire world, it might suffer and go down another $20,000, $30,000, maybe even another 30% or 40%. We never know. We'll see. But you can know that once the Fed starts turning on its liquidity, starts turning on the printing presses, well, everybody knows what asset prices do then. When you have inflation, new spending, new liquidity, it has to flow somewhere. All right, let's talk about the next big story, and that's the SEC has approved options trading for spot ETH ETFs. This is a pretty big story because ETH now joins the ranks of Bitcoin, which also has options trading. Options allow you to, we just talked about it, right? You can buy a contract that allows you to either buy at a certain price or sell at a certain price, and you can either buy or sell those contracts. they're good because they allow for bigger institutional, or really anybody, to be able to hedge or to acquire assets at a certain price or earn a little bit of extra yield by selling covered calls. There's a lot more strategies that you can run with options that you can't really do with, like, say, a futures contract or with just a spot ETF. So this is going to open up a lot of new institutional interest in ETH and hopefully bring up trading volumes there. So what's cool about these options is that they're physically settled, they're American style, and unfortunately, we're only going to have a open interest limit of 25,000 contracts per side when they launch. That doesn't seem like that much, especially if one ETH is one contract. That's not that much. But I would assume that the SEC is going to scale this up. They're going to take a look at how the markets use these contracts over the next few months, see if there's any market manipulation or any other sort of negative externalities that arise from the introduction of these contracts into regulated TradFi markets. And if they work, then they'll just raise the bar for them. So happy to see it. I'm sure we're getting a lot more crypto spot ETFs this year. Probably going to see a Solana ETF, maybe a Cardano ETF. I know XRP wants one as well too. And this is just like the next step in the game. Once you have the ETF, you get options, and then you can build all these different cool products on it as well too. Funny enough, before we move on to the next topic, I saw a tweet today, which Ethereum, the 2x short Ethereum product, which is built on the back of the futures contract, is one of the best performing assets of this year. Ethereum's down like 50%, and the 2x short ETF, I believe, is up like 200% or 250%. It's pretty wild. Like it's just sad for my bags, but I'm sure somebody else who is using these products to trade is doing really well. Yeah. So please, ETH, figure out what you want to do. Come back to life. Let's not go below 1,000. Lastly, a friend of mine, Jason Leibowitz, who we've had on the podcast before, back last year, a good friend of mine from Miami. He is the head of BD at this company called Meanwhile. And they are doing something pretty cool. It's life insurance that's denominated in Bitcoin. And they just raised a $40 million Series A, with the lead being Framework Ventures, Fulgore Ventures, co-led the round. And then they also had other backers like Wences Casares, who was the founder of Xapo Bank and is like a well-known Bitcoin OG. So what Meanwhile has created is a BTC whole life insurance policy. You know, for these like whole life policies, you essentially like sign up. You're like, okay, I'm going to give you $100 every month for the next, like, however long I live. And at the end of the time, I'll get some money. In this case, it's BTC that's denominated in BTC, and it gets paid out. I think sometimes you can take insurance early. We're actually going to have Jason on because I'm really interested in this and to see how they've like set up these products. But it sounds pretty cool, right? This is like a new type of product which is being built with a specific asset that we haven't seen before, and we might see pretty good demand for it. So these companies that invested are really helping Meanwhile move to the next level, right? And this is actually the second raise. So Meanwhile did a seed, or like it'd be a seed back in 2023 to be able to get regulatory approval from the Bermuda Monetary Authority. And notably, OpenAI CEO Sam Altman was one of the people who took part in that round. So it sounds pretty cool. I'm definitely going to have to get Jason on. When you put money into this whole of life Bitcoin insurance policy, it's tax advantaged. It's got a long-term structure. And unlike Michael Saylor, who's planning to take his Bitcoin to his grave, he actually has publicly said that he's probably going to burn it for the betterment of society. His own personal Bitcoin, not MSTR, not MicroStrategy's. He's going to burn it. In this case, this life insurance policy can be used in case you die. It gets passed on to your loved ones, and they get access to the Bitcoin. I guess the only bet is like, is Bitcoin going to rise significantly in the future? You know, is it going to 1 million from here? Who knows? But if that's your view and you think it's going to become like a global reserve currency, then why not denominate your life insurance in BTC? Well, that's going to wrap it up. Appreciate everybody for tuning into today's show. We'll be back tomorrow for Friday, and Easter and Passover is coming up. So hope you guys enjoy that, and make sure to follow the Leviathan News on Twitter and Telegram at Leviathan_news. You can come and join the Leviathan bot, which we also have a link in the show notes. And there you can submit news or do other things for our brand and earn some squid points. So we are an open community here at Leviathan News. Anybody can join. You can run a show. I run one. Garrett, we have a whole cast of people who just said, hey, we like the idea of what Leviathan is doing. We like this model for distributing squid rewards through it. And, we want to take part in that. And you can too. So come to Leviathan News, come join us and be a content creator through our platforms. All right. Well, that's going to wrap it up for today. I really appreciate it with you guys. Thank you for listening to Echoes from the Deep, and we'll see you tomorrow.